personnel at PU Prime Africa, and I want to welcome you to PU Prime's Trading Academy, where you have ample opportunity to learn and gain knowledge from the global financial market. This program gives you access to educational materials such as videos, PDFs, audiobooks, and etc. These have been put together by expert traders and experienced financial analysts at PU Prime Africa. So congratulations, as you are now part of the winning team who have mastered the tricks and the strategies of how to be profitable in the global financial market. We assure you that you also can learn the act of profitable trading. So sit back and enjoy all the courses.
My name is Michael. I'm the instructor for today, and we are going to talk about understanding the basics of trading in the global financial market. Okay, so this topic is very interesting. It covers a wide range of knowledge of what to look out for, right from the history, what the global financial market means, the history of the market, and the gold standard system and all that. So this, we need it, and we need to learn if we want to be very profitable in the global financial market. You need to have basic understanding about the global financial market. So let's get started. What is global financial market? So global financial market refers broadly to any marketplace where the trading of financial instruments occurs. So it means that it is a place where we trade, we buy and sell global financial market or securities. So instruments, financial instruments such as bonds, currencies, cryptocurrencies, equities, indices, including volatility index, major cryptocurrencies, and other derivatives. So these are the financial instruments that we trade in the global financial market. As we all know, that the word global means worldwide. So when we are talking about global financial market, we are talking about the marketplace that takes place all around the world. Now, the third part says the global financial market rely heavily on informational transparency to ensure the market set prices that are efficient and appropriate, which are practically governed by the forces of supply and demand. So let me explain this a bit. It's telling us that the global financial market rely heavily on the transparent informations from the market, which are governed by the forces of supply and demand. When we are in secondary school, in economics, we talked about supply and demand. So in global financial market, what we're talking about, it's the movement of the price, the raw price in the market based on the forces of supply and demand. So let me explain supply and demand a little bit. Like what we have on our screen here, we can see this is like a balance scale, and we have the demand falls, supply rises. So let me say what happens to the price when the demand falls and supply rises, the price falls. So in an environment, let me say in a market, we have large numbers of sellers. So we have large numbers of sellers and we have little numbers of buyers. What will happen? A whole lot of people want to sell their market, so the price will be cheap. They will have to reduce the price so that enough people will come into the market to buy whatever product they're buying. So they are selling, and the demand, let's talk about the demand. So when the supply falls, the demand rise, what will happen to the price? The price will go up. So it means that if we have a whole lot of people that wants to sell, a lot of people that want to buy a particular product. So let's say, for example, here we have a larger number of people that wants to buy a commodity or a pencil from me. And I see that in this place, I'm the only one selling pencil. And, we have a larger number of people that wants to buy pencil. What will happen? The price of the pencil will do what? We increase. So that is basically what moves the global financial market. So let's talk about types of financial market. What are the types of financial market that we have in the global financial market? The types of financial market, number one, we have the stock market, we have the over-the-counter market, we have the bond market, we have the money market, we have the derivatives, the commodities, the cryptocurrencies market, and the sports market. So we are going to be talking about this one after the other in the later slide. Now, let's talk about the functions of the financial market. What are the functions of the financial market? We need to understand why the financial market still exists. So financial market exists for several reasons, but most fundamental function is to allow efficient allocation of capital and assets in a financial economy. So what does it mean? It tells us that the global financial market allows the free flow of capital in an economy. Okay, so you'll be able to balance the market, you'll be able to balance the economy, you'll be able to balance the flow of capital in the economy of a country by also allowing a free market for the flow of capital, financial obligations, and money. Okay, so the financial market makes the global economic run more smoothly while also allowing investors to participate in the capital gains over time. So what we are saying here, we are saying that with the help of the global financial market, investors around the world can come in to tell us what exactly we are looking for, the country and the economy that they are looking forward to invest on. So with the help of the global financial market, with the help of the financial market, you'll be able to know the country, the economy that is stable. You'll be able to know the economy that is not stable. You'll be able to know a weak currency and a stronger world currency. Okay, so let's go to the history of the market. Okay, so let's talk about the history of the market. Today, the spot market, which is the Forex market, is one of the biggest and the most liquid and accessible markets in the world and has been shaped by several important events like Bretton Woods and the gold standard. Okay, so what does it mean? It means that the spot market, which is the Forex market, is one of the biggest and the most liquid market in the world. So let's talk about it. Why do we call it biggest? Because do you know that is a known fact that the total number of volume of money that circulates in the market is up to $6.6 trillion every single day. So it's an average of $6.6 trillion every single day. So this money, people were trying to tell us that because of this, and because it has been shaped by several global events like Bretton Woods, like gold standard systems, the market still remains the same. Okay, so, and it's important for traders to understand the history of the market and the key historic events which have shaped the market. Okay, so it is very important for us to understand this event as traders, as people that want to make money from the global financial market. Okay, so this is similar event. This similar event could likely occur again in different form and similar forms. Okay, again in different times or similar forms, impacting the trading landscape. History tends to repeat itself. So what I was saying, if you could remember that we had a pandemic, I think about 100 and something years ago, a century. Now, in 2020, we also have pandemic. Okay, so what are we saying? It's the market still remains the same, irrespective of global market that shakes, global event that shakes the market. Now, trading, which is an act of exchange, is thought to be centuries old, dating back from the era of trade by barter system. So we all know the history of the market. We all know that market starts from trade by barter. Before the Babylonian period, which ushered the use of gold coins. So gold coins became widely accepted as a medium of exchange, but they were impractical because they were heavy. So we also talk about what we are saying here is we're talking about the history of the market, how markets start from the era of trade by barter down to using of receipt, that is the Babylonian era. Then we talk about the Roman era, which brings in the gold coin system. Now, gold coin became widely accepted as a medium of exchange, but they were impractical because they were heavy. Okay, so we all know how heavy a gold is. If you want to carry certain number of gold, you can't move it all around. It's not durable. We can't move it all around because gold still remains gold. So in 1800s, the countries adopted the gold standard system, which means currency valued in terms of their gold equivalent. In the mid 1870s, most major economies were pegged to what? To gold. So all currency linked together in a system of fixed exchange rate. So they were pegging their economy according to the world of gold standard system. Now, this gold standard system is not perfect. So let's talk about the disadvantages of gold standard system. The system had no flexibility to adjust money supply in times of economic crisis, such as natural disaster, war, recession, etc. In such situations, the system has to repeatedly discontinued. So what am I saying? I'm saying that in this gold standard system, because there is no flexibility and no flexibility in the market in gold standard system during economic crisis, they have to stop it. To avoid the negative effect of reduced money supply, countries will break the equality between the gold reserve and money supply, thereby diluting the system. Okay, so that is little information about the gold standard system. So we have to talk about Bretton Woods Agreement. Okay, so before the end of the World War II, the Allied nations believed that there would be a need to set up a new financial system. Okay, so in July 1944, 44 countries sent delegates to a conference held in Bretton Woods, New Hampshire, USA, to deliberate over what we call the Bretton Woods system of international monetary management. To simplify, Bretton Woods led to the formation of the following: a method of fixed exchange rate, which means that for us, that this agreement also bring about the method of fixed exchange rate, the US dollar replacing the gold standard to become primary reserve currency. So the US dollar replacing the gold standard to become a primary reserve currency, the creation of two international agencies to oversee economic activities, the International Monetary Fund and the International Bank for Reconstruction and Development. So what are we saying? We're saying that in 1944, 44 nations came in together to deliberate on the new international monetary system. And three important things, important resolutions were made: that they want to have a method of what? Fixed exchange rate. Secondly, they want to replace US dollar for the gold standard system. So that is how US dollar became the primary reserve currency in the world. Now, the creation of two international agencies to oversee economic activities. So all these, they are being created by the Bretton Woods Agreement. So let's talk about more history of the market. So after the Bretton Woods Agreement, a whole lot of things happened. So which led to the beginning of the free floating system. Now, it did not take long for traders to realize the potential profits in this new world of currency trading. Even with the government intervention, there were still degrees of fluctuation, which there is fluctuation, there is profit. So this became clear over a decade after the collapse of Bretton Woods Agreement. After some time, some of these agreements collapsed. I'm not going to go more into that, but what we are saying is, even with government interventions, the market is not even stable. That is, there is fluctuations in the market, which means the price could go up, or it could come what? It could come down. So we have this even with the help of what? Government interventions. Okay, so then this also leads to another part, which is the internet trading. In the 1990s, the currency market grew more sophisticated and faster than ever before because of how people view it. And you could sit at home and make your money. So this brought about the history of brokerage firms, telephones, and all that. So there were about, we are saying that you can even be at the comfort of your house and place a trade. So we all know that the Forex market is the backbone of the modern economy. Yes, it's a known fact. You can check Google, you can Google it, you can find it anywhere. That Forex market is what? Is the backbone of the modern economy. Okay, so let's talk about the participants in the Forex market. So I'm not going to take much time here, but we are going to talk about the participant, just to tell you that the market is real. So in the participants, we have the central banks. I'm talking of the big central banks in the world, like Bank of England, like Bank of Japan, like Fed, like Federal Reserve of the United States of America, like Bank of Australia, Reserve Bank of New Zealand, and all. So these central banks, they also partake in the global financial market. Then we also have institutional investors. Institutional investors like hedge funds, like high investors, investment company or organization, they also take part in what? In the global financial market. Then we also have the commercial banks. Commercial banks also, they also take part in the what? In the global financial market. Commercial bank like HSBC, Citibank, and all that, they also take part in the global financial market. Then we talk about companies like Facebook, Stott, Pfizer, Tesla, Toyota, etc. They also take part in the global financial market. Then we have brokers. Brokers like the Pacific Union, we are also trading in the global financial market. Then before we get to individuals like you and I, we are also partakers in the global financial market. Now, because the market is global, because it is worldwide, it means it is being traded by people all over the world. Okay, so global financial, the market is being traded by people all over the world. And I hope you understand that because it is traded all over the world, we do not have the same time zones all around the world. So this brought about market sessions. So we, as a trader, we need to understand the meaning of market sessions. Okay, so when we're talking about market sessions, we're talking about time that markets are open or closed in the market. Unlike other financial markets, the Forex market operates 24 hours a day and 5 days in a week, starting from Sydney, then Tokyo, followed by the Europe, which is London session, and finally the New York session. So let's talk about it. So let's talk about it here. Okay, so let's talk about it here. You can see this box, if you can look at it, we have from 10 p.m. here, so let's assume this is 10, 11 p.m., 12, 1 a.m., 2 a.m., then we have 2 a.m., 3 a.m., 4 a.m., 5 p.m., down to what? 10 p.m. So this is a 24 hours chart. So what are we looking at there? Okay, so let's say market opens 10 p.m. on Sunday morning in Nigerian time, in our time, 10 p.m. in Nigerian time, and closes what? 7 a.m. in what? In Nigerian time. The Australian session, which is Sydney session, closes what? 7 a.m. on Sunday morning. Then on Monday, sorry. Then the Tokyo session opens what? 12 a.m. on Sunday and closes what? 10 a.m. in the morning on Monday. So, from 7 a.m. in Nigeria time to, from 1 a.m. to 7 a.m. in Nigeria time, we do have what? We have the Tokyo session. So let's talk about London session. London session opens from where? From 8 a.m. Nigerian time down to what? 5 p.m. Nigerian time. Okay, so from 8 a.m. Nigerian time down to 5 p.m. Nigerian time. So let's talk about New York session. New York session opens 12 p.m. then ends around 10 p.m. So you see that market never sleeps. We have 24 hours and 5 days, Mondays to Fridays. So this is just our time zones and all. So we want to say thank you very much for your time. We are going to stop here. Then the next topic, we are going to talk about what are traded in the market. Okay, so thank you very much for your time. If you have a question, kindly ask us. Ask your account manager, ask us on our group, Telegram group, all our social media at PU Prime Africa. Okay, thank you very much for your time. Have a wonderful day.